Good evening all, hope you're doing well. Quickly look at the calendar. I need to populate this into this sheet. I have not done that yet. It's just a case of getting the data file and then the weekly export, which I can do that after the video, but it's not really a problem. And it's worth noting that the yen, the Bank of Japan had changed their negative interest rate policy and we're probably going to go positive at their next meeting. So that's going to be of note. So it was a big week last week. This week we've got the CPI from Australia, we've got the consumer confidence. It's a big deal, but not massive. Fed speaker, lots of Canadian data, we've got GDP as well. So Thursday, really it picks up on Thursday, and on Friday, well, we've got the housing data and unemployment claims, but Friday we've got the PCE and then we've got Powell. So I think, to put my conspiracy hat on, so I think this might be really bad, and that's why this has been scheduled in. I think this could probably surge higher, and by doing so, they know in advance that it's probably going to come out higher than they want, and so they've penned in a Powell speech to dispel fears and to soothe the market. So I think that's probably what's happened, is that they've got like a leak of that data. They know in advance with a good degree of accuracy that this is possibly going to be poor, and then that's why we've got a Powell speech there. And he was dovish at the last FOMC meeting, but then the following day the dollar really picked up, because I think the retail herd and the small guys, they'd sold the USD quite heavily because of Powell's dovishness. But of course, when the herd get en masse and then they do one particular thing, there has to be someone to take the other side of that trade. And so if like 10 million retail traders sold the dollar, there has to be a big bank to take the other side of that 10 million trade, in that quantity, in that volume. So we'll have to be careful, because if he comes across as dovish, then on Monday it might reverse, right? So this is why you've got to keep an eye on your retail sentiment. It's really important, and we can see perhaps maybe where so the dollar is in a good position. It's actually the strongest as we open the week, and we've got the Kiwi as the weakest. So you could theoretically look for a new sell, but for confirmation, you'd want that to come over and then that to come over. Gold's pretty much in the middle. Pound and Aussie also in the middle too. So we have some trades running on the Euro USD. So ideally, the dollar doesn't come over here, but we know we'll have to wait and see. And the robots had a good month, but had a poor week last week because that reversal that we saw on the dollar. So it is what it is. But now what's happened with the robot is that the SL and TP are much tighter. They're 20 pips now. So we're in and out with profit or loss, and it's not really going to be a problem. I think 20 pips is fine because it gives us an okay profit, but it does mean that we're not being particularly greedy. We're just in and out. Okay, so that's just an update there. So the dollar is strong at the big picture level, and then this movement here is the dynamic shift. So that will tell us dollar should strengthen. If the dollar comes over here, it'll be mixed, because if it's in mixed, then it can come up here into strong sell. So if you're long dollar, you want the dollar to come over here. Okay, so what can we talk about? We can probably talk about the indices quickly. DAX has been an absolute beast, and so this is them going less short, so that's that movement there. And then they're seeing price action, but they're not looking at the lows. We made higher lows, but then at that point, let me just draw a box and we can see. So here they'd gone less short because this is a squeeze, okay? And so we had the reaction, and then here, is that right? Yeah, here they started to sell, and they did get paid initially a little bit here, and now of course they'd sold it again here on that candle, and so that's going to be a support. Right, okay, so quite strong on the DAX. However, let me show you US 30. It's a different beast. Big short squeeze, and we can draw a box. So we're having a discrepancy between Europe and America. And normally in a rational world, is that if the US indices fall, the rest of the world should fall because they're obviously the second biggest economy. You know, they say China's larger, but America is massive. Okay, so if the American economy is looking like it's crumbling a little bit or profit taking, then you'd imagine Europe should follow suit. We have to remember we've got end of month and end of quarter. So it's a big week. Okay, so this could be profit taking, but this is a big short squeeze, I think. And we zoom out, and this is crazy. This is crazy. That is just bonkers, isn't it? I've got an IG demo account that I was trading, and we have to go back like a decade or something. But basically, what happened on my demo account, yeah, we have to go back miles and miles. But let me just say, for example, let's imagine this was 2010, right? We were in this kind of range. And what happened is that we had a break of the range, and it wiped my account out on my IG account. Now the point of me saying this is that we were in this like range, and I was trading up and down. And the thing is, we're probably not going to come back down to these levels. And that's the thing. This thing up here is probably a new normal where we're not going to return down to these particular levels. So while you're getting used to a trade in a range, and you could be making money or you could be losing, what happens is that you get set in a routine of like range expectation. And of course, when it breaks out of that range, with the indices, they don't look back and they carry on. It's interesting. We've actually made a W. Can you see? There's a W there. But this leg here is just absolutely bonkers. Really, really crazy. And away we go. So just a lesson there is that we could be entering a new normal. And it's just crazy bullish. And I don't know how to get back to my time. Okay, so basically, while it looks like, oh, we can't go any higher, 40,000, that's just bonkers, that's ridiculous. We probably can, but we have to remember things have to take breather, and that's going to be a big deal. 40,000. I remember when it hit 30,000, I was like, oh, this is crazy. But then, of course, if it's crazy back at 30,000, then it'll be crazy there. But look where price is now, right? So don't get too comfortable about the range, because what happened with the indices is that they break and then pump. And so, I think temporary breather and inevitably a big bull run, maybe to close out the year. But we should be taking a little breath, because this has been rampant. Really, really outrageous, to be honest. And there's the short squeeze. So that's the result of them going less short. So that's meaning that they're going out of the casino and they're having to exit with losses. So I don't know if people would be buying. The herd, I don't think we'd be buying up here. I think it'd be less short. They could be, but I think it's more likely less short. So possibly we've got a bumpy start of the week. If we come to the risk calc, we are in a fear phase, because it's calculating the amount of red cells we have. That will change to complacency pending that the technicals improve. And we saw a change in the 24-hour, which is telling us that the bears are less short. So we want that to happen, because if they add short, we'll carry on up and up and up and up, and it will just be more skew. We want things to go back to some kind of normality where, instead of like going up and up and up and up, it goes up, down, up, down, up, down, and then it creates better trading conditions, you see. But if they sell, we just go up and up and up and up. So this is good. This is a welcome sign. And I wouldn't be too worried just because it says fear, but just note that we're not extreme fear. We will go to extreme fear when the big picture flips, okay? And that doesn't normally happen all that often. In 3.5, 4 years, we've only seen it a few times. Most of the time, the herd are programmed to be bearish because they look at the news and they see war and then they think, oh, this is bearish. We need to sell stock X. But it's that particular risk event in the Middle East, say, has got no impact on, say, like US tech. It's just US tech will continue higher because it's got its own fundamentals. It hasn't anything to do with the Middle East whatsoever. If we had a risk event in China, then yes, but it wasn't. It's in Israel. So probably a bit of a bumpy Monday, and I think the US indices look more heavy than DAX, so that will be interesting. And I'd imagine if the US indices fall, then Europe should follow suit. Okay, so we've probably got a bit of a bumpy start tomorrow, and then just remember to trade safely. I'll speak to you guys soon.